are live. Good morning, everybody. I'm not centered. Why am I not centered? Let's fix that. Does that look a little better? Welcome to the morning show, everybody. Spencer Israel, JC Parets, Steve Strazza. Got a great one for you today. We'll talk to Kenny Glick. We'll talk to Mary Thwaites. But we have a new guest on the show, the COO of a company called Public. His name is Steven Sikes. We'll talk to him about client behavior, what his clients are doing with regards to the crypto and the meme coins and the stocks. But more importantly, they have a brand new site that we've been playing around with the past few days called generativeassets.com. And it's been pretty fun. It's a fun new toy. So we'll talk to Steven about that at 9. I know we have some more bank earnings. We didn't talk really much banks at all yesterday, but they're beating. That's what they do. But now that we have a day worth of data, let's look back and see how they held or how they reacted to those reports yesterday. Today we had Goldman Sachs, we had Bank of America, ASML also top of my list today. But we'll see. We'll see what happens. All right, chat. We're all good. Yes. On we go.
Dude, I don't know the last time I was this excited about the guests that we're having on the show. I'm not gonna lie.
Oh boy.
How excited were me and Spencer this morning right now? Straz is just like shaking his head. When are we this excited about our guests?
Well, I know it's good because you don't have much time to play with these new toys throughout the day. So the fact that you're in there playing around with this, I know it's good.
Dude, look at this. Look at this. Throw up slide 2 real quick. Look what I did. I'm the man. Look at this. Look how good this is.
What is slide 2? I'm afraid.
Oh, God.
Look at slide 2. So slide 2 is showing, look at this. This is so good. Are you seeing this? So I went to the AI. So this is the generatedAssets.com, right? So it's an AI where you put in, an index of the types of stocks that you want to build a portfolio around. Right. So here, Steve Strazza does his water aerobics with the elderly folks. And so I want to build a portfolio with an index of stocks that benefits from the growth in water aerobics. And then the AI tells me I'd be happy to create a portfolio based on the companies that benefit from water aerobics. This is an interesting niche in the fitness and recreation industry. Shout out Steve Strazza.
It is a niche market. So what did they put in there? Did they put in like pool?
Look at the new slide 3. Look at the new slide 3. Look how good this is. This is so freaking good.
Some of these pool companies are probably great investments. I was talking to my dad about Pentair, PNR. Shout out Pentair. That's a pool stock.
Throw up. All right. So here's the aquatic fitness wave. Just a bunch of charts and a back test and everything. Showing the returns, and then look at the components of the index that it just built. This took like 30 seconds. Like I just did it to like troll you about your water aerobics, but throw up the new slide 4 there, Spencer. I just did this to troll you. I was like, oh, let's make an index of water aerobics, but it could be anything. Jeff Mackey's in there doing stuff with retailers and consumer stocks and everything like that. And he's looking for the growth in golf and pickleball. He's making indexes on that stuff. But for the water aerobics connoisseur here, one Steve Strazza. These are the ones you're looking at: Brunswick, LTH, Lifetime Group, Hilton Worldwide, Nike.
Yeah, Brunswick. No, isn't that boat engines?
Oh, well, that's the idea.
And stuff.
Marine products and fitness. Yeah.
You have to have a little imagination, Steve.
Okay. Yeah. So anyway, here you can take this off. But here's my point, right? We do this sort of thing all the time. We create custom indexes. We were just looking yesterday at the drones index just to show you how creative, the team gets. So we've done this for many, many years without using the AI. But now we can also ask the AI, because I guarantee you, we're going to be doing this a month from now, or 6 months from now, or a year from now, 5 years from now. We're going to be creating an index, and then we're going to also put it in the AI. It takes 30 seconds. And I guarantee you that on more often than not, we're going to get an additional name from the AI that would not have been on our radar. Well, guarantee it.
I told you. And I'm sure it'll go the other way as well, where it's going to miss one that we want to put in there. We're going to audit it. And I'm sure it's good. I'm sure it's great.
No, 100%. The machines are going to miss things that the humans are going to catch because the machines don't necessarily have as much common sense as the humans.
Yeah.
But at the same time, the machines are digging through a ton of data that the humans are not. So I think together, the humans with the machines, very powerful, Strazza, very powerful.
And it's about time something like it existed, because we've been building these baskets on our own for as long as I've been doing this with you.
No, it's great. Great. All right. Well, I just wanted to share to the audience, you guys wondering what the hell JC and Spencer are so excited about and why Steve Strazza keeps rolling his eyes.
I'm not rolling my eyes.
A little
like
bit, little bit. Shall we?
Yeah.
Sure.
All right, ladies and gentlemen, we're going to get the Dow futures this morning up 170 points. That's look at this, 44,420 for those who partake. 44,420 up 170 points for the Dow futures this morning. S&P futures up 0.25%, just a smidge under 6,300. That's 13 handles for the S&Ps this morning. NASDAQ flat, 23,000 and change for the NASDAQ 100 futures. 30-year bond futures up 0.33%, 112.5. Crude oil down 1%, just under 66. Copper down 0.75%, 553. Gold up a little bit, 33.40. Silver up a little, 38 and change, with the VIX down back under 17, 1684. The volatility index continuing to price in about a 1% move on a daily basis for S&Ps. Over in funny money land, ladies and gentlemen, we're looking at Bitcoin up 1,200 points. That's a full percent this morning. 119,000 for the Bitcoin. We're looking at Ethereum also up almost 1%, 3170 for the ETH. Over Solana, 167, up almost 2% on the day. Total crypto market cap, Mr. Spencer Israel. We've got the total crypto market cap at 3.7 trillion. 3.7 trillion. It's early in the day, but on pace to close at the highest level ever. How do you like me now?
Rough day yesterday.
What? So hold on. So tell me more. What stands out from this morning's futures and compare that to what happened yesterday?
There were just some big ugly sticks. Yesterday was the kind of day that lets you know if you're too big in things in a bull market.
You want to know what stood out to me the most?
What?
If you throw up slide 3, throw up slide 5. Sorry.
So
this is the one that stood out to me the most, and this is quite the change in character. This is something we haven't seen in quite some time. If you guys can throw that one up, and that is the Ethereum Bitcoin ratio, making new multi-month highs up here, looking to complete this base. You had a ripper over the weekend in Bitcoin. You had a reversal on Monday, some follow through yesterday. Within all of that, Ethereum up yesterday, making new multi-month highs relative to Bitcoin. This, to me, is what stands out the most. Tell me I'm wrong.
No, this is big in crypto, but yesterday the tape was a little nasty. I think warrants our attention if we're talking equities. This is
it was
big
nasty in it was nasty in Bitcoin itself with the follow through after Monday. Again, you had some selling pressure in the stock market. We'll get to that now in a minute.
Yeah,
but tell me that this, while all that was happening, didn't pique your interest. Come on.
Yeah, you got to be long the ETH and Sol. I'll say it.
Dude, CryptoPunks up 10% in the overnight session, up at 135.
Bitcoin's not the vehicle. I don't do ETH in Coinbase. I do ETH in my brokerage account because I can, and we've been in ETH calls.
Which brokerage lets you? Is this the old Robinhood, or you have a different one, or Schwab, or one of these?
First of all, if you're trading options on Robinhood, stop right now.
No. I'm saying, what brokerage are you buying ETH?
Schwab,
yeah.
ETH calls.
I have a Schwab account. I didn't know you could buy ETH in that. That's cool.
Dude, I'm in Schwab 95% of the time now.
Really?
Yeah, I love it. I really do. That's been a new development over the course of the past few years.
I have a Schwab account because I used to have a TD account. I mean, I still use my watch list, just to show you how old school I am. My watch list, I have a watch list that I pull up sometimes on my Thinkorswim that still has 4 Qs.
You're really dating yourself. When did that change? 2010?
Man, that hasn't. Think about that.
I don't remember.
When did it stop going from 4 Qs to 3 Qs?
I don't remember it as 4 Qs. So it's been
Nah, me neither.
probably 15 years
So
at
I
least.
have a watch list on my Thinkorswim that is still
Wait,
4 Qs.
Can I search for 4Qs in Thinkorswim right now? Is that a
No, just ask when they change their
white.
ticker.
It's white.
Ether calls, Bill. The breakout multiplier. You should have them.
Can we just talk for a second about why
2011 is the last 4Q candle that I have.
There we go. And
$55.
You know why they changed it? Do you know why they changed it?
No.
What?
Because you know there's a lot of immigrants in New York City in particular.
Yeah.
You know, you've got a lot of people from China and Japan and Korea all over,
Sure.
and they would just walk around Wall Street going, fuck you. And then they're like, oh, we have to change that. That's no good. So they changed to 3Q. So that's why.
That's why.
That's why it happened. All right.
True.
Rigetti up 8% pre-market. S-bet. Can't stop, won't stop. Another 14% out here today.
That's the Kenny stock, right?
Yep.
Dude, he's been pounding the table on this name.
Unity up 6%. Price target hike. Another price target hike from Jefferies that has my attention is this MET-C. So MET-C is doing an MP out here. There's some sort of story here. We got to dive in. I don't fully understand it. Somebody reached out and actually mentioned it yesterday. We're just going to scratch the surface on it. They are a coal company, but they found some sort of large, like rare earth deposit, in their stuff. And I guess Hegseth was over there. A government official went and like toured the mine. So they're thinking maybe a similar deal here with the government for MET-C. That's why you've seen this absolute explosion of momentum over the course of the past couple of
Strazza,
years.
let's talk about conspiracy theories, right?
Yeah.
Like seriously though, like on a real note. So, you know, we don't make bets around here that the government is going to step in and make moves in a particular industry or anything like that. I guess maybe in crypto we have, knowing that, we're, the government is not just a complete player hater like the former administration for like literally no reason other than they lose control or whatever it is that they were saying.
Yep.
So that's nice, I guess. It's a nice to have, but I don't really put that much weight into it. However, what's happening in MP, it's kind of hard to ignore. And you brought up a good point yesterday to me that there's probably going to be some more of that. And so it's not so much like we're going to buy an industry because it has a potential for government intervention, but maybe from a short selling side, avoid shorting stocks where that's possible, right? Like, I think that's a real risk that's on the table for short sellers and something that even longs should consider. And as somebody who never, ever does, I think you make a good point. It's something to think about.
And this individual story is a great market lesson because the fundamentals here for MP are truly terrible. They have a heavy short interest for good reason. You could easily argue this is not a viable business without help or without subsidies, right? But the market had some idea that those subsidies were coming, right? It was ignoring the fundamentals, and the stock was trending pretty well out here, all year. Then all of a sudden, boom, you get the headline, you get the announcement. They're in with the government now. Everything changes, right? So if you're sitting short a stock like that, that's tough.
Throw up slide 2
all the time.
Throw up slide 2. That's what's going on.
I would love to do some live charting, maybe in the back half of today's show, if you guys are interested, because I do think it's important to talk about just kind of the tape from yesterday. It's a potential bearish follow-through day. Not seeing it so far, right? They're buying them in the pre-market this morning. But if you do get another red candle following through on some of those nasty, nasty bearish engulfings yesterday, I think it leads to a corrective wave for sure. So today is important. What you tend to see in bull markets, hold on, we'll get to this in a second. What you tend to see in bull markets is, big down days, but then no follow through, right? Big red candles, then green the next day. That's very common. I think it's important that happens today just to keep the current up leg in shape.
I got to tell you something. You had some crypto selling off yesterday, Bitcoin reversing early in the week. You had some selling pressure in banks and whatnot. When I see Ethereum up, when I see Chinese stocks ripping in that environment, it just does not, if those things were selling off also with banks, that would be one thing. But when you're seeing like speculative assets like that ripping in an environment that is, risk off, that definitely stands out. Tell me that didn't stand out to you yesterday.
For sure. And it's fine, but you're talking primary trend, right? Those tactical trends could dislocate, move in completely different directions.
I mean,
In other
regional
words,
banks got crushed yesterday.
right. I'm just saying, like, banks can move lower and US stocks can move lower while China's moving higher, right? On a tactical time frame all day. We see it all the time. So I don't think that's evidence to say, oh, we're not going to get a corrective wave in the US. It's still rally mode. But overall risk appetite for the primary trend, yeah, I think it's really encouraging to see cryptos doing what they're doing. And China looks great. China looks so good.
How come nobody is talking about the US dollar?
We are.
Well, a lot of people were, especially at the start of the month.
Throw up slide 2 there.
For Sol, you still gotta go. You still gotta go to Coinbase for Solana, but not for long, from what I understand.
You know, I mean, I think that this is the big one. I think Strazza, what was your exact quote yesterday? This is the most bearish data point for stocks right now.
I think so.
You
Risk,
know,
risk assets in general, right?
you know, sentiment has completely shifted. You have the Economist magazine in the fourth quarter of last year telling you, it was Benjamins in a wad shooting up into space, right? Like a rocket ship in the dollar, the envy of the world, right? And then, of course, speculators were the most bullish they had been in years. And of course, they were on the wrong side, and the dollar got slammed. Maybe the worst quarter in the history of the dollar, or something like that. Crazy stats. So, dollar got slammed. Then in April, the Economist magazine, the same magazine that told you that the U.S. was the envy of the world, wad of Benjamins shooting up in the air like a rocket ship, now tells you how a U.S. dollar crisis would unfold. Like, seriously, swear to God, this was in April of this year. The very next day, the dollar bottomed, right? Of course, and it ripped from there. And then so we roll over after that, and we dip below those Economist magazine dollar crisis levels.
So not the lows is what you're saying.
No, it was the low for like 3 months, like literally the day after the publication of that magazine, and the dollar ripped in their face. So then rolled over, broke slightly below those levels, and is now back above. And when you look at the global fund managers, you're looking at some of the most or the most underweight the US dollar that fund managers have been in 20 years. The Economist is telling you that a US dollar crisis is about to unfold. You're looking at just the commercial hedgers. Commercial hedgers are actually net long the dollar. That in and of itself is very rare. Speculators, the dumb money, are shorting the dollar here at very high levels. So, it'd be perfectly normal for the dollar to do well here. And then coming back to Strazza, wouldn't this play into stronger American outperformance, particularly technology stocks,
Strong dollar.
large cap technology stocks? Am I wrong? Isn't that what the trade would be?
Large cap tech in a rising dollar environment?
Yeah, wouldn't tech do the best in that environment versus some other industry groups?
It's hard to say. They try to teach you that like small cap should do well in a strong.
Yeah, but
dollar
if the U.S. is if international is underperforming with that rising dollar, then that means the U.S. is outperforming. What's driving that U.S. outperformance? Wouldn't it be technology?
I think that the big cap tech stocks would prefer lower dollars. However, they'll probably still outperform. But we're talking about relative performance. You know what I mean? Like I still think the big cap techs do better with falling dollars, lower dollars. They're converting a lot of sales.
On a relative basis, tech outperforms in a rising dollar.
I think tech outperforms on a relative basis in most environments, though.
Oh, here we go.
Mm-hmm. Yeah, it's nuanced, probably. I think we have this situation now, JC, where we were getting mixed signals about the bond market from the equities market, where you have stocks that do better with higher rates ripping out here, looking great. I'm talking about metals and mining, right? Commodity stocks. They're doing excellent, maybe signaling rates are going higher. Then you have stocks that do much better with rates lower, ripping out here. Look at the regional banks up until yesterday. Home builders were getting going, biotechs, right? That part of the equity market came undone really, really hard yesterday. The interest rate sensitive stuff, the groups that do better with lower rates. So now I'm starting to think to myself, maybe the metals and mining stocks were right, not the 3Bs, not the banks and the biotechs and the builders. So I'm watching these trends super closely.
Yeah, bonds too. Bonds got the crap kicked out of them too. They're going to be moving together.
I was looking at bonds a lot yesterday. It's not good for a lot of the risk on exposure that I'm holding, if that's where we're going. I'll have to do a lot of selling.
Let's pivot, because again, I wanted to talk. We talked about China's outperformance yesterday. I'm buying some Southeast Asia today, as a matter of fact.
Us too.
Yep. So it sounds to me like we're on the same page. I like that Southeast Asia. I like, how China's kind of like Notre Dame. It does its own thing. Oftentimes it could be a raging bull market around the world and China will still go down, and stocks around the world can be, under pressure and China could still go up. I really like that characteristic of China. Like Notre Dame, it's kind of in the ACC, but it's not. Like, they do their own thing, but they're in the ACC schedule, but they have a TV contract, so like they're in, they're out. China's like that. So in addition to China, again, go back to slide 7 and 8 there, please, Mr. Spencer, showing Ethereum breaking out to new multi-year highs relative to Bitcoin. And then this morning, next slide, please, you got the bonk making new 6-month highs. I want to give a shout out to the bonk. And then when you really go down the cap scale, I don't know if you noticed this morning, Mr. Strazza, the Melania coin, up 28% this morning. The Melania coin,
isn't she in a 99% drawdown?
Yes. So 28% gain for Melania coin this morning. The Harry Potter coin, Harry Potter Obama Sonic 10 Inu, also making new 6-month highs, new 5-month highs, I should say, this morning. Bonk making new 6-month highs. Floki pushing up against new multi-month highs. I think the animal spirits are out and about. Look at Popcat up 9% on the day. Dog with Hat up 3.5% on the day. These things are making some moves. So something worth paying attention to.
I'm big in the bonk. I like the Solana.
Dude, look at that base and Peanut the squirrel.
Hold on, I have some Peanut too. I'm big in the bonk. I really, really, really like 2 coins right here that I'm adding to HBAR and Algo. These were 2 big runners Q4 last year. 2 of the best performers. Nice big consolidation wave. I think they're ready. HBAR looks so good. So good. They move together. I don't know why.
I want to tell the audience, so the WorldCoin making moves as well, kind of trying to complete that base, like that failed breakdown in June there on the WorldCoin. I don't hate that. What are you looking at? 1.7, 1.8 billion in market capitalization. I thought that you were going to give me a no when I said I was going to go scan my retina over in Paramus on the way to the city tomorrow.
No, I'm good with it. I'm good with it.
I'm a little bit surprised. I thought you were going to be like, JC, don't do it, bro. Don't do it. I really did. I swear. And the fact that you gave me your blessing.
But you're not going tomorrow, though. We're hanging out in the city tomorrow.
I'm gonna swim by Paramus. How long do you think it'll take for me to get my retina scanned at one of these orbs?
I don't know. Find out and let us know.
I just like saying the word orb.
Yeah, it reminds me of like Zelda.
Kind of like Zelda. Yeah, that's a good point, actually.
Speaking of Zelda, they're making a movie I saw.
Spencer, how's backyard baseball? Did you try it?
No, I haven't had the chance yet. No.
I want to.
Yeah, I know I will.
Spencer has kids, you see. Spencer is busy. Spencer doesn't have time for all those water aerobics.
No. I bought a new MacBook Air. I'm going to use it on the plane tomorrow. Maybe I'll play a little backyard baseball.
You tell me how it is. How about that? We have Kenny in the house. Let's bring him out.
Bring him out.
All right.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Try to make some more money on it.
Mr. Kenny Glick in the house.
Yo, what's up?
What is the deal, my man?
We're a little distracted right now, just talking about this S-bet. And
dude, another one for the good guys, Kenny.
Shout out to Kenny Glick. Shout out Kenny Glick with the S-bet, pounding the table, even when it wasn't working.
I can't believe they actually created options on this thing right at the most perfect time, and they were cheap for a stock that could legitimately go to $37 when this thing was at 12. The $15 calls a week and a half out were $2, and then obviously we rolled into some 20s and 30s now, so we're just waiting to see how we cash out of this bad boy. And I got another one, USAR. I mean, this then is just another one. It's just ready to go. It's not as it's not shorted like some of these other stocks. It's not as pumpy dumpy. See, I'd rather the more worthless and awful right now, the better. And that's been the case. I mean, after that Wolf trade, when they announced, basically they reiterated bankruptcy and the stock went up 400%. This is it, baby. This is the environment I love. But keep a gander on the USAR. But right now,
yeah, the USAR, because that was a SPAC at the end of last year, correct?
Yes, and it went to 20, crashed, came back. It's come back a number of different times.
But this is something that Spencer's always talking about, is that $10 level, you know, right where the issue is. I think maybe the issue may have been at 11, whatever it was. Man, the fact that we were able to gap back above that 10 and go.
Yes.
That $10 mark for SPACs is so, like, when you talk about support and resistance, like, that's going to be such an important psychological level. I mean, Spencer's always been talking about
only at the beginning. Eventually, it's not. Right?
This was 7 months ago, 8 months ago. What do you mean?
Okay.
This one's fairly new, but the real big
that was a long time ago, Spencer. Still coming into play.
The big level is the 20, because that's the magic number that it hit, about, a month into its life or 2 months into its life. And if it gets over that, not only is it an all-time high, it's just a blue sky breakout in a runaway psychotic bull market. And this thing has options. Hello. So, yeah, big fan. Big fan. Yeah. Oh, I mean, listen, most of these stocks we've been talking about lately are inevitably going to go back down. But even when they do, like ASTS, right? This is how you test another test of the bull market. If it takes 2 weeks for your stock to pull back 6 points and then it makes it all back in a day, bull market. So ASTS came roaring back, was sitting around dragging it down after the offering for 2 weeks, and it's made most of it back in basically 2 days. So this is the space rockets robots trade is still raging. Space rockets, robots, quantum AI, and chips. We're not stopping, and we're never going to stop. And it's fantastic. Quantum's making them come back today. Take a look at Rigatoni. But, I'm a little distracted because, the banks were a dud yesterday. We had a little JP Morgan action. We had this one trade in Wells Fargo, and then you just go where the money's at. But I got to look at Goldman Sachs today because it notoriously fades the gap. No matter how good the numbers are, no matter how good the news is, it usually fades. You've got a VWAP break on Goldman Sachs. I don't know if anybody's going to be trading this one, but under 705, you're looking at, at least a 5-point test of those lows from this morning. So again, shorting again, it's very difficult endeavor right now, but I'll keep an eye on it. Morgan Stanley, same kind of thing. You had a slight gap, gave it all back. So the bank's kind of like weak. And, when I was a kid, I was told, market can't rally without the financial stocks. I think it'll be all right.
No, I love this. Listen, guys, for you guys who don't know Kenny, Kenny is looking for mean reversions, things that are, high and breaking down, looking for a reversion to short, things that are pieces of hot garbage that are ripping higher, looking to take advantage of that, regardless of what's happening in the overall market, right? That's the beauty of it. So for me, I look at Kenny's mean reverting strategy as something that's incredibly complementary to everything else that I'm doing, that most of it tends to be mean reverting in nature. Other than some of the option stuff that we do with Sean, a lot of that stuff that we're doing is trend following. So, to be able to counter that with a mean reverting strategy, I mean, for portfolio diversification, for real diversification, and incorporating different strategies, this is great, dude.
Yeah, listen, and speaking of mean reversion, when you miss a trade like SBET, and that first pop, you don't want to get involved at the open. And it's scary because, usually it's gapped up and it's ripping out of the open. You're kind of waiting for some stability to get involved in. That mean reversion to VWAP happened on SBET yesterday 3 times. It came back to VWAP and said, I'll give you one more chance. And then a little faux show bro right at VWAP. You had 2 extra chances to get involved. So you're right. You probably shouldn't be chasing here. Our near-term target is basically $37 on SBET. We've won the bet. But if it keeps going, you got to know that you could go another 20 points on this stock. Thing is, you're right to be cautious. But the thing is, caution is right on the chart. So you have a very specific spot to sell this thing today. And I'll give you the exact price. Last night, I don't know if you can see this. Oh, wait, let me show you. I got the wrong chart up. But last night, this stock pivoted right here, right at that price. See that price? That's $31.58. And this morning it went to what? $31.58. I'm going to go ahead and say put a stop at $31.58, my friends. So look at that. I mean, there's some symmetry for you.
So what, you put a couple pennies below?
Yeah. I mean, I usually put 3 stops on. So if you're going to use a couple stops, 31.50, 31, and just to keep it half number, whole number, but right there. And if this thing rips down like right now, it's given up that double top to the 34. That's what I'm saying. This stock, as crazy as it's been, has been pretty good to trade because look at this. Like I said, there's the faux show, bro. That's in the morning. Then you had one more at the right there at the end of the day at 2:00, and then you had the low what's called when it goes into the aftermarket, that lack of liquidity. They run the fucker. So next thing you know, we're back to 34. Over 34, we're going to be rocking. So right now, we'll wait for it. So it's doing us a favor.
When we take out those highs from yesterday after hours, it's gone.
Yeah. We break 34. So now, because there's not much to go on, here's the yearly chart, right? So once we got over, this was basically your lifetime VWAP. Not often do you get to talk about a lifetime VWAP, but that was our first target. Over that, now we're in this zone over here. So that first area that we got into these candles, these big candles on the way down, they're easy to infiltrate on the way back up, and they get to these 37. So I'm thinking we could get to 37, but then if we get through 37, we're looking at, basically $45. But again, stock was $12 just the other day, and there's eventually going to be some profit taking. That profit taking could lead to an absolute rollover and destruction. So I'm a fan. I love trading this action, and I will not be hesitant to buy some puts on this thing when it starts to roll over. All right, my friends.
Well done. I love the walkthrough. It's great. That's why that's why we get all this great feedback from Kenny, right? So Kenny's doing this all day, guys. Trade with Kenny, and what he just did, he's going to be doing all day, every day. So jump on in and trade with Kenny.
My man. I'll see you guys in the room.
Adios.
See you, Kenny.
Kenny Glick, ladies and gentlemen, the grandfather of day trading. Nobody out there has been day trading longer than Kenny. And the reason that we know that is because
he tells us
day trading didn't exist.
Okay.
Day trading did not exist before
right.
Kenny was trading.
That's right. That's what
that is mathematically a fact that Kenny, the grandfather of day trading. Shout out, hit the bid.
All right. Let's switch gears. Let's talk building portfolios. Let's talk using AI. Let's talk with Steven Sikes. He's the COO of Public, and he's here, and we're excited to talk to him. JC, are you ready for this?
Oh, man, I'm super stoked. I love this thing.
All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
There he is. Steven, how are you?
I'm good. How are you guys?
I'm doing great. I'm distracted because I'm playing with this thing nonstop. It's very addicting.
Which one? You talking the generatedAssets.com?
Dude, I love it. I love everything about it.
I think I think what we realized in building Public is when you're serving, a broad set of retail investors, right? Most people, hey, they've got their, short-term trades on, but they've also got their long-term portfolio. Our folks really like to sort of manage their money themselves. They want to, make good decisions. Again, the occasional trade. Again, we serve it all, but even our heaviest traders also have sort of a long-term portfolio. And like the stuff that AI can do these days, both on the trading side and the portfolio construction side, is wild, man. And so like nobody had really done this, generated assets thing. And just for the audience's benefit, right? Generated assets. It's a platform where you can basically put in any prompt and it will build you a well-diversified portfolio according to whatever those parameters you want to throw into the chat is, right? So you want to invest in a portfolio of CEOs that deadlift or only founder CEOs or whatever it is, right? Like
CEOs that deadlift. Now that's a strategy.
Yeah. I mean, listen, people have their own preferences. They have their own biases. They can put in anything you want. Like we're working on building in support for indices. So, you want to put in S&P 500, but I don't want oil and gas, or I want to be overweight financials, or what, again, you can sort of tilt it the way you want. And like right now, all of that stuff lives in sort of the chat bot. We're building out all of the, sort of more classic screener type functionality too. So it's going to be a full bottoms up portfolio construction tool, leveraging AI, leveraging all the amazing market data, and content that we have access to, which is cool. And then like right now, it's a tool just for, building your own portfolio informationally. Pretty soon, later this summer, early fall, you'll be able to implement that portfolio. We'll manage it for you, rebalance it, maybe even tax loss harvest it. Like all that good stuff for that long-term portion of your portfolio, which is, hey, it's cool, man. But not the only thing AI can do, right? There are plenty of good examples for, taking trades and positions that AI works too, right? So like, I think our business, again, exists to serve both needs, right? People that want to trade and people that want to manage long-term money. And most people do both, right? Everyone's got their sort of responsible portfolio and then more their near-term bets. And I think, that's cool.
So building a set like this seems obvious right now, but what prompted this idea?
I mean, I think it was exactly what I said, right? We had, I'll put it this way: we've been building in AI literally since the GPT-3 API came out. So before ChatGPT, we're talking like early 2022. We started building on top of the early OpenAI, GPT-3 APIs, and we were using them for like customer support. And we were starting to experiment with what people, might ask from a, financial information perspective. We rolled out like our first chat experience called Alpha, aptly named, again, for helping people do investment research, identify opportunities. And then out of the back of that, what we realized is, yes, there were people that were like asking Alpha really interesting questions. Happy to talk about where I think there are angles and interesting trades that can come out of sort of LLM interactions. But at the same time, we saw people asking Alpha all the time, hey, I want a portfolio of the top 40 stocks that do XYZ. And we're like, Alpha wasn't very good at it, right? It needed a point, a specific solution to be able to do it. So that's where generated assets came out of. It was literally just, hey, this is a need that we see people putting into the chat, into the LLM services we've got. And, it wasn't set up for that, right? It was set up more for sort of trading and individual name investment research.
I would encourage anybody out there, to go and play with it. Spencer dropped the link in the chat, generatedassets.com. Guys, this is not like a sponsored interview. This is literally, we think this is so cool. We got to talk to the guys that built this. And that's really what this is. It's really just a bunch of nerds that are very excited. Highly encourage you to play around with it. Like, Jeff Mackey, who's big into the consumer and retail, he's creating indexes and having fun and sending them to me in private chats about like the portfolio he's building around the growth of golf and pickleball and the types of stocks that benefit from that growth. I was just making fun of Steve because Steve does pool aerobics and he's in his 30s. So like the people he's doing these aerobics with are 3 times his age. So we just like to joke with him. So I asked Generative AI to give me the generative assets to give me a portfolio of companies that benefit from the growth in the pool aerobics, right? And the growth, and it did that. And then, I love India. Like I love Indian food. I love Indian people. I love visiting Mumbai. I mean, I'm obsessed with India. So I put in, I want an index of the companies with Indian CEOs, right? And now you just have Microsoft, IBM, Adobe, Google, ServiceNow, Cisco. I mean, you just go on and on the list. It's a pretty damn good portfolio, so like, I would encourage anybody out there listening to just go play around with it. Just be creative. Like, it doesn't mean you have to do something about it. Maybe you do, maybe you don't. But for us that build indexes, custom indexes all the time, to be able to do what we do and then also ask the machine to assist. It's like having another person in the room, and we're going to get names from the machine that we wouldn't have found otherwise. And the machine's not always perfect either and needs the human element, but together combined, I think is very powerful.
Yeah. And like, again, you can use it in interesting ways too. Like one of the things I used it for is I built what I would call a short portfolio, right? You can't implement it as a short portfolio, but I was like, hey, find me all the companies that have really slept on AI over the last couple of years, who've put out skeptical press releases. The CEO fades it. Like, hey, where they're like, again, it can do any of it, right? Like, yeah, it's built as a long tool, but I use it to filter sort of for short opportunities too. And you find some gems in there, find some skeptics that are holding fast with their anti-AI stance, or companies that are going to be particularly hurt by the AI revolution. I think it's an interesting little trade there.
Sure, I like that.
Yeah, man.
Steven, I do want to ask you about sort of your client behavior, right? You are the CEO of Public. You guys serve retail investors. Talk to us about what was going on in April around the Liberation Day and the tariffs, and we had basically a V bottom. We dropped, we came back. What sort of behavior did you see, broadly speaking, amongst your clients. We've seen headlines about retail investors having bought the dip very aggressively. Was that the case on public?
Yeah, I mean, it's interesting. You had Kenny on earlier, and it was like you were talking about his mean reversion strategy, and like in reality, like that's kind of a lot of what we see in both directions from our member base, right? It's like buying the dips and it's selling the spikes, and it's actually like it's interesting to see it play out over sort of time scales, but especially dips like we saw, in early April, right, where it's this like super tight V bottom. Like those things just train retail investors to just like hammer those dips, right? Because it comes back quick. And like, you zoom back out like the last few years and our sort of lived experience of going through this. And like, people now remember April, they remember sort of March 2020, right? COVID, it was that super tight V bottom. And then we rallied, and then nobody wants to talk about 22 and 23, where we just like hung out along the bottom and things got a little dark. But generally speaking, I think that's what we see is when we see those sort of sharp V bottoms, I think we see just consistent buying behavior all the way across the bottom. Now you contrast that with 22, 23, where it was like, all right, we're down here for a bit. And like, some of that energy wanes. But again, no different from sort of what you'd expect in like a very sharp down, quick rally. And then I think like, even over the last few weeks, as we've had some tariff headlines, as we've had, whatever's coming out of the administration, I think we're seeing a lot less volatility driven by that news. I think retail investors are starting to pick up sort of the trend of, hey, nothing's ever going to be as bad as the first headline. Like these are all sort of negotiating points. We're gonna sort of end up somewhere in the happy middle, or at least that's what people are trading today. And I don't know, hard to argue.
All right, so
a good example, like last night or yesterday, big sell off in crypto because of the stuff on the Hill, right? The procedural vote on the Genius Act and the two other crypto bills, did not pass. Crypto markets, fell pretty dramatically. Dude, our customers were just hammering Circle, Coinbase, Bitcoin, ETH, basically the full stack of crypto assets and crypto companies. And like they were right. Late last night, boom, done, deal made. It's going to get passed today, and things are off and running. So.
But how do they behave at all-time highs?
Neutral, I think, interestingly. Again, I do think we see like, you see a big name. Let me pull up the quick like what traded yesterday. But you see things spike, and I think we tend to see a little more fading of sort of those near-term spikes than you might expect. Like, hey, one of our competitors, Robinhood, has been like just ripping the last few weeks, hovering right around $100, which is about its all-time high. Like, it's been a neutral trade, right? If you go back the last 6 or 8 weeks, again, I think for a retail investor population, they all know Robinhood. They like believe in the model. They're like the core customer, and they sort of know what that means long term. And that was a very strong name from a buy side perspective among our customer base over the last couple of months. Now at all-time highs, like we're seeing it far more neutral.
That's interesting.
Yeah.
How do you gauge sentiment from your customers? Are you polling them? Or are you just seeing their behavior on their accounts, or both?
We talk to customers a lot. Part of my job is running customer support, so I'm always in chat. I'm on Reddit all the time, on the subreddits. Anytime public comes up, we've got our own subreddit. We're always sort of engaging there, which is both a lot of fun, but also gives me some sentiment. But I don't know, man. People tell you what they're going to do, and it's always different from what they actually do. So we watch the flows, right? I think that's where it always comes back to, is like, what are people doing with their money? And it's both like how many people are trading, and then where are the big dollars, right? And I think those two things aren't always the same. And I think it's interesting. We sort of try and pay attention to those separately.
When I aggregate sentiment overall, I saw some of the most pessimistic levels in history, depending on how you calculate it. And in the conversation with things like COVID and great financial crisis and dot-com bubble lows, like we were there this spring in a lot of those cases. Historically, those are the beginnings of incredible trends to the upside, right? Would you say that, what you were seeing this spring, felt that way as well as what the data suggested everywhere else, that, pessimism was running, pretty wild?
I don't know, not among the retail investor base, I don't think we saw a lot of pessimism. I think
Interesting.
again, I think of the, of the class of again, I think we serve a little bit of a upmarket retail investor base, people that are more serious about trading, more serious about long-term investing. I think that's a population that is very confident in sort of the long-term health of the market and understand the wealth creation opportunity, and like they see dips as buying opportunities. I think that bears out in every conversation I have. That bears out in the flows. I think where you will occasionally see pessimism is when retail investors get burned on a specific name, which we've seen happen plenty of times. Mostly via unexpected dilution, right? Something trades well above its premium, like management does the smart thing and decides to issue stock, and retail investors get burned because the stock price goes down and they get really mad. And like, that's where I think we see pessimism. And I think that's where we see a little bit of like, less confidence in the market in some of these high flyers. Is like, okay, can I count on management to sort of not dilute me to the end of the earth? But
they can, and they will.
But also, like you said, every investor under the age of 40 has been trained to buy the dip. Right?
That's what I was going to say. So your audience.
I mean, we're sitting at like all-time highs today. I think every investor ever has been trained to buy. Like every dip has led us to today, right? Yeah. And so it's like, I don't know. I think that's like not an unreasonable thing. I'm a huge believer in, America, the American economy, American stocks, and like American exceptionalism. And like, I see what our tech companies do every day. We run a tech company, we build software, we use the latest technology. AI is incredible. Like, I think it's all super well founded. Now, like in any day, week, month, are we like a little hot or a little cold? Like, hard to predict. But I think that's what we see from our customer base is like, hey, let's buy the dips when we get a little cold. Let's sell a bit when we get a little high, but let's play the long term.
Can you, your audience does skew younger, right? Substantially younger than others, or not really?
No, I mean, I think we're like core, I hate using generational terms. Like, our customer base is like digitally native, right? But I think that skews from, people, again, it's like mostly post-tax. So again, a little older, right? You got to be in your core earning years to be like,
sure.
I'm saving beyond my 401k, beyond my
digital native that's a really interesting way to put it. Versus age. It's more digital native.
And like the truth is, like, how we define that age group on the top end goes up by more than a year every year, right? And like, now I would say we have plenty of customers in their 50s and 60s who just want to do business on their phone, on the browser. They don't want to talk to somebody on the phone. Like, if they have a need, they want to chat, right? Like, they're not, again, it's like it's a 2025 way of doing business. And like, every year that customer base gets a little older. But again, I think, like, hey, we're talking like middle 50s going to be like 32 to 45 of our customer base. And
interesting.
So definitely not Gen Z. I mean, plenty of 18 to 25-year-old customers, but the core of the business is sort of in that like 32 to 45 age band.
And then what are you gonna say? Go ahead, Spencer.
Well, what are you finding is, since you deal with a lot of customer service, what are you finding is like the most requested thing that people want out of a mobile first broker?
Yeah, I mean, I think it's like it's a barbell, right? And I think a lot of stuff, like, we'll see when you serve this customer base, it's like you got people that are very active traders and they have very specific needs. So it's like, hey, keep building out better charts and better technical indicators, better order types. Like, give me some algos. Like, hey, give me, like, we're working on it, but like, hey, how do I like just generally short the equities so I don't have to use options to go short? Then on the other side, it's like, actually, I want better tools for managing my super long-term portfolio. Give me direct indexing, give me rebalancing, give me tax loss harvesting. It's like the most passive and the most active. And like, they both want awesome tools. And like, again, there are tons of people that like do both. And I think the vast majority, in fact, have some allocations in both directions across our platform. And so like, we're just continually investing on sort of both sides of that barbell.
What you're saying, Stephen, it resonates. So I got a message from our CTO yesterday, and he's like, JC, sometimes I feel like such a bottleneck, because there's so many great ideas and you want to do all these things, it's like these things take time. He's like, if you want to do things really fast, like, we can bring on more people and do them faster, right? But he's like, we just need to like set expectations with like the time horizon and like creating the priorities and like, you know, because like we bring in Brett and like into like a meeting and I'm just peppering him. Can we do this? Can we do that? How long is it going to take to do this? Where's this? And he's just like, you know, a punching bag. And I feel bad because I realize it as I'm doing it. But like, you need to set the priorities. Like, of course, you could just snap your finger and do everything, but it doesn't work that way, right?
Oh, I mean, listen, we've got a good sized team. We ship really fast. We get a lot of stuff done, but I still every day there's some member on our subreddit being like, "Hey, why haven't you done this yet?" And I'm like, I don't know, man. I got like millions of customers that have different preferences. Like, I got a team that's working.
I'm sorry.
Really
wait,
hard.
that was me. I'm sorry.
Yeah.
That was me.
And I'm like, I feel you, man. Like, I want it all to be here today too. But like, you should to look at our track record of this. Like, be patient, man. And
yeah,
also,
you
like,
just told me yesterday. Give me at least a week. Like, I got it.
Yeah, and also like, I want people to have some self-awareness that like, hey, man, you're one guy, right? Like, your needs might not be representative of the full universe. And like, hey, we'll get to it. And like, we want to serve every possible need. We want you to be super happy. But like, you know, and the fact that you're vocal and communicating with us and having a great conversation, like, puts your needs at the top of the list, to be honest, because you're there and you're engaged and you're helping us grow. But like, come on, man, take it down a notch.
You know, and I'm not going to mention any names, but they're like, you know, we use so many different services. And, you know, some I've had this exact same conversation. In some cases, I'm investors in, I'm friends with the CEOs. And I'm like, why are you building this? Why are you building that? It's JC, nobody cares. That's just you guys. The rest of the world wants these things, so we're building that. So I get it. But then on the other side of the coin, I see companies that are building all this crap that I know for a fact no one's ever going to use. And it's like, why aren't you doing this over here that we're going to use instead of doing all this stuff that no one's, you know? So like, not everybody does what you're doing correctly, right?
Hey, and listen, we have to make trade-offs like anybody else. We got a team that's so big, we got so much money we can invest, and like we got to figure out what goes first, second, third. But again, I think it's getting easier, though. It's getting easier is the truth. The pace of development's getting faster. I think AI tools are really helping.
But then it just creates a new problem because now, since all these things are happening, now there's so many more things we could build that, right? So it's a good problems. But nevertheless, tell me what's next, Stephen. What's on the priority list? What are you dropping soon? What should we look forward to? Particularly with this generated asset stuff and, you know, the AI. Totally into it.
You know, I mean, I think we've really nailed a lot of the active trading stuff. Our options platform, I think, is the best in the business, particularly for people that want to be able to trade on the go and be on mobile. Again, we're the only broker that pays a rebate on every single contract, so you're getting money back net of all the regulatory fees and everything on every contract. And it can be quite a lot if you do enough volume with us. And so that's like, we launched that last year. We launched a great margin business too, got really good rates. So like, that business is in really good shape. I think we're working over the next few months on the other end of the barbell, again, taking generated assets, turning into a real awesome direct indexing platform, right? Going to let people sort of build.
Dude, I've been waiting for that for like 10 years.
The ideal long-term portfolio that will rebalance for a reasonable fee, help you tax loss harvest, set it and forget it. But again, it's not like set it and forget it like a robo-advisor. It's set it and forget it according to your views on the market and what you want to be invested in over the long run, and really sort of take that out a little bit of your day-to-day trading portfolio, so it doesn't bleed into the individual positions you're taking day to day, and so you don't end up in a position where you're dumping out of something you really want to hold for 5 or 10 years because you just kind of like needed some capital, or your margin, you're at your margin limits or whatever. The other thing I'll say is like continuing to invest in the AI tools. One of the things I've seen for trading, and some of this is like my own experience as a trader, is using AI really well to actually start to track some of these, like what I'll call like, you know, what the industry calls corporate actions, right? But I said earlier how a bunch of retail investors have gotten burned by management teams dropping offerings and stuff like that. Like what I've seen in the last few months, as you know, you sort of get to like O3 and ChatGPT and Grok 4, is as they start to, you know, if you use them right and you're tracking a name, they do a really good job of tracking Edgar, which is the SEC filing thing, and sort of picking up the breadcrumbs of what might come in the future. And so like, you know, there was a particular name that was pretty hot with retail. I'm not going to give the ticker, but it was a closed-end fund that was trading at a massive premium. And they had an offering, you know, an offering out for the last few months, or I think it was like 15 months. They've had an offering before the SEC that they're trying to basically issue more stock because the fund is trading at such a premium to their net asset value. And like, it's been going on so long, and it was like, hey, what's going on? So on a lark, I like asked Grok 4, because I was like trying to test it out as it released last week. I was like, hey, what's going on with this name? What's going on with this offering? Is this thing gonna, is this thing gonna come to fruition soon? Or like, go look at Edgar. It gave me back a bunch of probabilities of what date the offering would be approved by the SEC. And it was like, it was pretty right. It got approved last night. The fund is off 20%, 25% this morning. And I was like, pretty good. Like, I don't know why that wasn't priced in, why Grok 4 had it. Grok 4 knew based on Edgar, like probabilistically, roughly when this thing was going to be approved. It basically thought it was going to be in the middle of this week. And smashed it. Just like,
not bad.
And I'm like, hey, like thinking about that as somebody that runs a business catering to retail investors, how do I turn that into something that's more easier for retail investors to use, both to like identify trading opportunities, like we were talking, like you guys were talking about earlier, but also to protect themselves and protect their portfolio. Like, it was a pretty, it was something Grok 4 saw coming, but obviously the market didn't, just based on the price action this morning. So those are the sorts of things that, like, again, I think we're like, as the technology takes a leap, that probably, GPT-4 would not have been able to nail that. Grok 4 nailed it, right?
Steven, the next prompt right after that is, hey, nice work. What's the next one? That's
totally. I think, again, I think this is the thing. Like, Grok 4 is now really good. I haven't tried it on a broader screen. I think my experience with the LLMs is they struggle as you get to really broad screens like that. I think they're really good when you give them an individual target. And so I think thinking about how to do that in parallel, build some technology to run a bunch of, to run a screen across a bunch of names in parallel. Again, it's not that different from what we've done with generated assets, but doing it towards these protection trading opportunities. Again, there's something there. And I think these are the things that, we're deeply engaged in the market. We all like to trade a little bit. Like, we're all paying attention. And when we see things like that help make us money, we like to try and build those into features to help all of our members.
Listen, you're doing a hell of a job. I hate to keep you from building all this stuff. Like, Spencer, let him go. Go build some.
The market's about to open, so we should let him go. Steven Sikes, everyone, the COO of Public. Steven, thank you so much. We are going to continue playing with your toys, and looking forward to seeing what you got.
I'm an easy guy to find. If anyone in the audience wants to chat, find me on Twitter or Reddit. I'm around.
Nice job. Keep up the good work.
All right,
I'm rooting for you. Nice, man.
Yeah.
Dude, I love this thing. I love this thing.
No, seriously, I saw it. I saw it last week or over the weekend, and I was like, this is great. This is just a fun toy. All right, so it's 9:30. Oh wait, we have Mary here. Let's bring Mary out. And then I know we have to hop. And then I have some announcements I want to make. But Mary's here and she sent over some charts. So let's see what Mary's watching, shall we? Mornings with Mary. Is that what we're calling this? Maybe. I don't know.
Mary,
good
so
morning.
Nice to see you today.
It's nice to see you. It's been a minute since you've been on the show with me.
No, I know. I gotta hop. I'm handing over the baton. Try not to get us canceled, Mary.
Okay, I'm trying.
And then he's gone, just like that.
And then he's gone. Oh well,
All right, Mary. I know you sent over a few charts. I'm in the process of putting them into the deck. What? Let's see. I see some financials. See some interactive brokers.
Yeah. So here's the thing. My mind is kind of in two places, and Steve kind of already alluded to this morning. So yesterday we had the day that we had, and a couple of things really stood out. Obviously, China stood out. And so that was one of the very first things that towards the end of the day, I started to look at. I'm still long some China, but had sold off a lot of other things that we had been positioned in earlier in the year, maybe even at the end of last year. So I went into Rangefinder, and I wanted to actually show this again, just because for our members, this is such a useful tool that I don't think it's probably utilized enough. So throw up Rangefinder. The image that I have.
New Rangefinder.
I don't know if this is like version 5.0 or whatever, but it's got a facelift here recently. And so what I love to do is when I want to search for a theme, I will go into Rangefinder and use those filter functions so that I can really zero in on what I want to look at. So last night, I just went into the asset details and I was searching by country. So I just selected China. And then how I like to use this, I go to price details next, and I select the entry. And so this is going to show me all of the trade ideas that are in Rangefinder that are from China, that are right at that line in the sand that we have drawn, whatever the technical level is, it's right there within, let's say, 5%. So these are our most actionable trade ideas right now. And so here's my list. And of course, the list goes on. I just took a screenshot here. But at the top of the list, Alibaba, this is one that I've been in several times. And what I love about Alibaba is there's such a clear level at that 120. Not only do you have former resistance, we broke out, but then, kind of had a failed breakout earlier, and now we're kind of below it. Then you've got the VWAP anchored from the highs. And so if we start to clear that 120 and get a weekly close above 120, I'm going to be back all in because, again, it looks like trend reversal back in the books and path of least resistance is higher. So Alibaba is one that I've got an alert set on now. And there are a lot of different interesting trade ideas setting up in China. And I know that you guys were talking about this earlier. Something else that stood out to me yesterday, I'll get to IBKR in just a minute or just a second, but something else that stood out to me yesterday were the semis. And obviously I know that we had the news on NVIDIA going back to China. But, for me, the semis looked great yesterday. There are a couple of laggards that I'm keeping an eye on, like AMD I'm watching, SMCI. They're pulling right into their VWAPs anchored from highs. And there's a catch-up play there. So I think as long as the semis, SMH, holds this breakout, risk on for the semis.
We have to mention ASML, which is down almost 10% this morning off their
earnings. Is it report. Earnings?
Yeah, earnings.
Not so good for semis then.
Yeah.
So still going kind of with that risk on environment, financials. So last week we were talking about the Kingsoft and the China. We were also talking about banks and financials and biotechs. And so that's kind of where my risk on brain is at. Interactive brokers. This is one of our favorites that we've traded many, many times. Again, a great clear level here on interactive brokers at roughly, let's say 59.60. As long as we're above it, clear line in the sand, blue skies ahead. If we start to trade below and get a weekly close below this one, it's not ready. Along the continuing with the risk on kind of environment, the biotechs, another great level in Axum Therapeutics. And there's another spicy chart that I like, Viking Therapeutics as well. But Axum, if we're above this 110-ish, again, to the upside, I like it. Huge base. And, the biotechs, the banks, the builders, Steve's 3Bs we were talking about last week, and he talks about often, those look ready to go. Maybe we get a little bit of a consolidation here. And so after the day yesterday, I'm curious to see what happens today. If we get the green candle that Steve talked about earlier on, or do we get a continuation day down? There's a lot of trading time here. So I'm going to be watching how the day closes because if we do get a continuation down and we do maybe start that corrective wave, I'm going to be looking back into some more of the commodity space. And so one of the trade ideas that is setting up in commodities really, really nicely is palladium. And I just have the ETF here just because great base, again, coming in a confluent zone with the VWAP anchored from highs. Great risk reward if we get above 112. I'm going to be going long on this one. So, I'm kind of waiting to see how today shakes out, how we close the week to kind of determine. I'm going to continue to look in the risk on aspect of the market, China, the speculative stuff, the stuff that's been working, or maybe we need to kind of zig and do something different.
Well, that's where my mind's at. Especially risk on that hasn't gone yet. Like Unity is up 8-9% this morning. Steve mentioned a price target increase, like big freaking whoop. Like a price target increase from Jefferies is worth 9%, but it is risk on and it hasn't gone yet. And actually, it looked pretty good. It looked like it was going to get. So sometimes all it takes is a stupid headline like that to get us going, right? So
precisely.
Like you'll see the headline today, I'm sure. If not already, Unity software up after Jefferies raised the price target. It's like Jefferies raising the price target is just the rock was already hanging over the ledge. That was just a little push to push the rock down, right? Or in this case up. So
up, I guess.
Yeah. maybe bad analogy, but you get what I'm saying. So
Exactly.
yeah, I'm always looking for growth. Always looking for there's the leaders and there's the laggards. The leaders have left the station, right? Now time to find the laggards. Guys, if you have any questions about any of our research, our trade ideas, rangefinder, talk to Mary. Okay, email her, call her. That information is on the screen, and she spends all day talking to clients and trading herself. And she is one of you, one of us.
One of us.
Yeah, exactly. So okay, thank you for the ideas, Mary, as always.
Yep.
I know we have to hop. I did want to do a quick programming announcement today at 4:00. We're doing a special crypto live stream. Louis Sikes will be there, and it is altcoin summer. So look at that beauty. Look at that beautiful.
Look at that handsome face.
It's just a beautiful image, is what it is. The whole thing is great. Altcoin summer. The link to watch this video is pinned to the top of the chat on YouTube. This video will also be on our YouTube channel. It'll also be on our site on that link. So check it out. 4:00 Eastern time today. Altcoin summer and why crypto is going to $10 trillion. So that is what's happening.
A lot of zeros.
That's too many zeros for me to acknowledge, frankly. So that's what we got going on today. That's at 4:00. We'll see you for that. Hot Corner Insider members, you'll get your weekly video with Alfonso. Kenny is going live noon right here on the channel for his new show, The Long and Short of It. And because Steve is traveling tomorrow, he's doing his weekly breakout multiplier video for members today. That'll be at 11:00. So a busy day. Oh, and forgot the episode 2, class 2 of the All-Star Options Masterclass is today at 3. If you're in All-Star Options, Sean will be talking about that in his emails later this afternoon. So a lot going on today. Busy day for us. We got to hop. Thank you to the chat. Thank you, Mary. Thank you, Kenny. Thank you, Stephen Sikes, as always. Everyone in the chat, we love you. We'll be back tomorrow morning with Brian Shannon. It's going to be fun. And that's what I got. All right, go make some money and stay safe out there, all right?
YOLO responsibly.
Always responsibly.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go